be on YouTube. Steve, yeah, for sure, man. It's really cold here in New York City. All right, is everything running and functioning the way it should? I think so. All right, if someone could post the link to the YouTube to the T3 virtual trading floor, I would appreciate it. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. We have our position disclosure, and we are ready to rock and roll. All right. So, the market today gave... Pat, do you mind just pulling that shade down for me over there? The market today gave perfect technical follow-through. Now, I don't think that predicting the continuation in the market today was necessarily easy. A lot of it came, as a result of Jerome Powell actually speaking. And we had such a big move yesterday, plus a flat open this morning, where we had already sold off from, what was the pre-market high in the SPYs? Let me check it out. Yeah, pre-market highs was 468. So, I mean, we sold off from 468 to, 10 minutes after the market was open, 462. We had a big pullback. So going back to the daily chart of the SPYs here, that 468 was basically into our technical equilibrium. There was a thought in the back of my mind that maybe that was it. We know that these hammer-type candlesticks provide a probability that is greater than 50% of a snapback to equilibrium, right? Equilibrium is the space represented by the 8 and 21 EMA. And so that's what I'm expecting. But part of me in my brain was like, all right, we were at, 468 pre-market, which is pretty much just about there. Could that have been it? And then, we're all the way down to 462 10 minutes after the market opens. And then, obviously, the market liked what Jerome Powell had to say in the press conference today, or not press conference, when he talks to the stupid political leaders. And the market was able to catch a bid and close really well. So S&P today is up 0.9%. Pretty nice. And we got our perfect technical follow-through to equilibrium, which is what you would predict from a big picture. Qs up 1.5%. We know that the NASDAQ was the most oversold, so it makes sense that they have the heaviest snapback. Now, even with that, we've come from 369 to 386, just for some perspective, in like a day and a half here off yesterday's low, just to still not even quite perfectly touch the lower band of equilibrium as represented by the ADMA on the daily chart. And our IWM, which was also a bit oversold, the Russell today is up exactly a percentage point, so a little bit relatively weak compared to the NASDAQ. Also, though, really solid follow-through, almost this ADMA on the daily chart. So the market today, again, basically gave perfect technical follow-through off of yesterday's candle, and it is exactly what you should be looking at as a technical analyst. Now, I still, if you're like a big picture swing trader and you only trade daily charts, don't think it would have made sense to just come in and buy the open today versus yesterday's low for a move back to the space between the 8 and 21 EMA, which are basically touching right here. It's because that risk reward doesn't really make sense, even at a probability of greater than 50%. And that's also considering that we had already pulled back from our pre-market highs. So I actually thought that today's open, being a flat open, made it a little bit trickier. We wanted to get some established relative strength and relative weakness that we could focus on. I had a feeling that it could be in oil names today. They were set up really well coming into today's trading session. But I wanted to actually kind of, see the whites of their eyes and let the market have its opening volatility before I, start looking at any type of execution on trades. That Bed Bath & Beyond just upticked here after hours. Sorry, it just distracted me. So I was looking at a couple main things. I was looking at relative strength land, right? Particularly relatively strong stocks. I was looking at Oxy, Apache, and FCX. I also mentioned ExxonMobil, but ExxonMobil was still a little bit extended. Didn't love the banks as much today. At the same time as that, I really liked the idea of these beaten up names that put in some serious retracement hammers yesterday, more similar to the market. My favorite of which was that LABU, but there was plenty here. The Open I liked a lot because it had that upgrade, but the list was too big for me to even kind of go through everything in the morning meeting. You had Netflix with the candle there. You had AMD that we really liked. We mentioned in the morning meeting to be long AMD. Bigger picture versus 130 worked out, really well. We talked about Square. We talked about these higher lows and like a DKNG and a what was the other one? Peloton. DKNG and Peloton both actually putting in higher lows, so showing some short-term relative strength with those stocks that have obviously been super beaten up and super relatively weak overall, but the fact that everything else made new lows and Peloton and DKNG did not was noteworthy there, and they were gapping down this morning. We spoke about SoFi possibly long versus yesterday's low area as another one. We spoke about Teladoc. Teladoc was actually also one of my favorites, despite the fact that I think one of the silly analysts came out and lowered their price target today. But really liked this Teladoc for a retracement. So, and then we had momentum trades. Lucid through 43 was a call for a momentum trade. One of you guys brought up this TME in the morning meeting through 7. I mean, guys, today was awesome. Today was awesome because even though the market was a little bit tricky, and I didn't have confidence necessarily that the market was going to really be able to help us, every single stock that's on my watch list from the morning meeting today worked. Like every single one. And a lot of them were very different trades. Oxy. Probably the trade of the day was Oxy for the team. The amount of people that were involved in this, the amount of people that caught this. This Bed Bath & Beyond is ripping right now. Am I missing any news on this? Just the icing on the cake right now. Let's go. Sorry. So I mean, this is what I'm saying. Literally everything worked today that we had on our watch list. If you were looking at Oxy, if you were looking at Apache, if we had spoken about in detail, like after this day, oh man, I wish I was involved in Oxy, like there's so much relative strength in oil, they're gonna go to the moon, whatever. That's kind of what the thought process there was. And then we just wanted a setup. We didn't have the technical setup to actually be able to get us into those trades. And then finally this technical setup built out as just this perfect, amazing, bullish consolidation. And then the trade was there. And not only was the trade there, we called out the buy even before the technical breakout. Like the technical breakout that I mentioned was 33.25. But intraday, I called out this buy right here at about 32.90. Versus opening lows. I mean, the pricing on that was awesome. So I mean, I got to give myself, honestly, and I got to give all of us as a team a pat on the back when the credit is really due. Market was a little bit tricky, and then what helped give even extra reward on these trades today was then when the market actually followed through and gave us help. Because I remember looking at SoFi. I remember being in SoFi, and I remember looking at AI, which had that tail yesterday, and this Sumo, and looking at how these things were trading early when the market was weak, and just saying to you guys on the team here, like, man, if I could actually just get some market help. Look at what SoFi is doing here, like the first 15, 20 minutes of the day, while my market was just being kind of heavy and weak for the first 15, 20 minutes a day. I was like, imagine if I could just actually get a little bit of market help on my SoFi, on my Sumo, right? And that also let like this Oxy kind of pull in from its extension that it had on the small time frame, just from kind of where it opened there. Like I don't know, guys. It was just an awesome day today. You know, we got follow through a little bit in that XBI that we're looking at off this, you know, kind of opening trade. I know that Brant tried it once. It got stopped out of his first trade, but I hope you were able to get back in and capture this move. It actually didn't close that well, Labu and XBI. But, I mean, just pick your name out of, like, every single stock we spoke about in the morning meeting today. If you got in at the right prices as we discussed them, I don't know how you couldn't make money today. And overall, it was a fantastic day for the team as a whole. You know, I'm able to see all of our professional traders' P&L. So overall, it was a fantastic day for the team as a whole. I had a really big P&L day today, and that's pretty much all I have to say about it. You know, the market gave perfect technical follow-through on these tails, the market itself, and all those names we were looking at. At the same time, relative strength was relatively strong. You know, this Oxy today up over 7% on the day. Apache up 9% on the day. And then still some of those beaten up stocks that we were also looking at. Peloton up 6% on the day. I love it. I love it, guys. So great job today. Yeah, okay, WeWork. WeWork was the one that wasn't able to give the follow through 950. So you found one, Jerry. You found one that was kind of on the list. This was really more on my list for yesterday when WeWork had the news than today. And we spoke really early on, even though it was breaking that 950, that the volume confirmation wasn't there. WeWork just isn't ready yet. There's a ton of resistance. There's just a ton of resistance in this area between 950 and 10 bucks. But it's still one that I have conviction in. I've got a pretty solid position in it. I think it's actually my biggest position by dollar value that I'm in. Let me confirm that that's correct because I don't want to give any lies. Yeah. It's my biggest position by dollar value. So we'll see what kind of follow through we're able to get on it. All right. What was the news in Bed Bath & Beyond?
4 different insider buys posted.
The insiders are buying. Tell them insiders to step it up, man. I think I got more stock than they got. At least based on that information you just posted. At least their recent buys. All right, so that's all I got. With that said, I am happy to take a look at any questions. So just giving us a little celebration today where it's well deserved. Yeah. It's I started getting distracted by the Bed Bath & Beyond. Lots of insider buying. All right, first thing I'm seeing here is from Christian. This morning I bought Apache at the break of 30. Okay. So 30s are kind of daily resistance that we had discussed as a level in the morning meeting. That's right here. So I'm seeing actually now for the first time that if you only went long off of the ignition bar break on the 5-minute chart here in Apache, that you would have gotten shaken out. So let's see if that's what happened to you. You got shaken out at 10:13. Yep. At 10:13? If you bought the break of 30, I don't see how you could have gotten shaken out that early. You would have gotten shaken out if you were using the ignition bar low, which is the right technical stop, assuming you're using a 5-minute. I think the right stop here would have been 29.88. If you're saying you got stopped out at 10:13, that's well before that pullback. 80 may didn't even catch up to your stop loss yet. But let me read this rest of your comments here. What upsets me is what happened. What'd you say? Oh, sorry, 10:55. Okay. 10:55 makes sense. It's exactly where you would get shaken out. What upsets me is what happened next. Just after 11 a.m., I saw the market react to Powell, but I passed on trying it again. Apache telling myself that it was not the right time of day. Truth is, I knew that the news made the time of day not as important, but I did not take the trade because I was afraid to lose more money. Not cool. I should be thinking about the right thing to do in terms of probability and not thinking about making or losing money right. Yes. So, I mean, yes and no at the same time. I don't like to rebuy breakouts that push me out. I don't. If I was you and I used this as my stop loss, I'm pretty confident that I wouldn't have rebought this here either. I think the people who were successful in the Only names today were more successful in Oxy than they were in Apache. I think that the people who were successful in Apache were in earlier, like more off this earlier pivot low, which actually would be a cheat off of the $30 resistance break, but it's exactly what we kind of did in Oxy where we cheated. I don't think you did anything wrong here. I mean, first of all, the volume when it actually comes in was stupendous here on like this new break of highs. But I really think that you did the right thing. You know, the timing of it was a little bit unfortunate. This was definitely, you know, partially related to the market actually finally helping our trades when Uncle Jerome was speaking. I can't fault you at all on getting pushed out of this trade. I don't think that you did anything wrong, and I don't think you did anything wrong not buying back in. The time of day, so the other comment that you're making is correct. The time of day is not good, but we have to be cognizant that sometimes that typical time of day that we're looking at can be extended, or, you know, it sometimes midday can be okay when there's other things happening, and there was clearly something that was happening today. You know, Powell speaks, the market moves. The market moves, it means that there's trading opportunity, right? So again, I really don't think you did anything wrong here, Christian. You put yourself in the position to make money with your trade. You got pushed out of it. You were conservative to not get back in. I don't like retaking breakouts that push me out. I'm just curious if you used a 15-minute ignition bar if you would have gotten stopped out. And the answer to that is no. So the 15-minute bar is 10 a.m., so I don't know if I would have used a 15-minute ignition bar here myself. Sometimes, I know Felipe was talking about game planning at one point in the VTF today, and he was talking about sometimes using 2 outs. I forget what stock he was talking about. He was chatting with Stefan, so it was probably one of the Stefan stocks. But he was talking about, big bid in Bed Bath & Beyond. 55K at 74 cents on the bid just came in. I like it. So Felipe was talking about how sometimes he takes trades with multiple outs. I'm a big proponent of that as well. So it's something that you could think about if the risk is appropriate to you. I mean, it would have been 35 cents risk to give to the 15-minute ignition bar, but you wouldn't have gotten pushed out. The 15-minute chart holds in perfectly, but the 5-minute gives you shakeout. So again, I really don't think you did anything wrong. I'm just trying to think of kind of some more outside the box stuff here on you know, what you could have done to position yourself better or differently, or not get pushed out, or whatever it is. Bed Bath & Beyond just broke 14. Let's go, champ. Sorry, when I'm broadcasting on YouTube, I'm not allowed to talk about if I just bought or sold any stock. I think it's fair to say that I'm currently trading a little bit back and forth, though, because you guys know that I'm in it. All right. I hope that helps. Next here from Mr. Trees. How do pre-market support resistance levels even have any effect on intraday trading if the pre-market volume is so low? That's a great question. Most of the time, it doesn't, right? Most of the time, it doesn't. Pre-market support and resistance levels, I broadly suggest that people don't pay attention to them. There's a couple exceptions here, though. One is if it's an earnings report. If it's an earnings report and it's trading heavily pre-market or post-market on that earnings report, those levels do make a difference. And also, for the indices themselves, it's worth paying attention to what the market did pre and post market. It can give you reference levels to trade off of or trade versus, and it's not unusual that we see the move that we want happen before the market even opens. And that goes back to sometimes the market is difficult, right? How many times has there been that, you know, really weak close? We all want the market to have the big gap down the next day. At 5 in the morning, the market's down really big pre-market, and then by the time we're finishing the morning meeting, the market's come all the way back up to flat, and, you know, you've lost out on a lot of that opportunity that was there if you got in pre-market at those price levels. So that is when it's actually a little bit more technically important, and most of the time it is not. It is not. So good question there. Scrolling down here. From Ricky, for thin names like OLPX, what's the volume look like here? What's the 5 minute look like? Okay. For things named like OLPX, is it better to plan profit stops around whole numbers? So I still think it's better for if you're using limit orders to book profit or to enter a position on a limit order. You don't want to use whole numbers. As not a firm rule, but as a pretty close to firm rule, I don't use limit orders on prices that are divisible by 10. And I especially don't use limit orders on halves and figs. So I figures a whole number. So like, Bed Bath & Beyond's up on one of my market makers right now. I would just about never place an offer at $14. I might go $13.99, $13.96, $14.06, $14.16, something like that. But I almost never put bids and offers on whole numbers or halves, because there's more liquidity there. It makes it more difficult to get filled. And then you can extend that, honestly, to almost anything divisible by 10. So it's to a lesser extent, but I don't really ever bid or offer like 1360, 1370, 1380, 1390, because again, there's more liquidity there. It's harder to get filled. The opposite is true on stop losses. On stop losses, especially if you're dealing with a thinner stock, you want to use the liquidity that the market is providing you to limit slippage. So like right now, if I was long Bed Bath & Beyond and I wanted to exit a really big position, I could tell you right now, because I'm looking at the level 2, there's 55,000 shares on the bid on NASDAQ at $13.74. That means if I had a 10,000 share position, I could use that 55,000 shares. I could whack that 55,000 shares to utilize that liquidity and minimize my slippage. And yeah, Bed Bath & Beyond is not a thin stock, but I just have it on my market maker right now, so I'm able to talk about the level 2 in there a little bit. But yeah, if you're using those thin stocks, that's when, you definitely don't want to have, if it's a thin stock and you're long off $100 support level, you want your stop loss at $100. You don't want your stop loss at $99.99. Because the $99.99 stop is going to give you all kinds of slippage on the out. The $100 stop loss can really help limit that. Good question, Ricky. Next from Robert. We talk a little bit about your execution prices. Okay, it's kind of what I was just getting into. Funny follow-up. You mentioned previous days how you would never put limit orders at the 50 or round numbers, etc. Do you have any guide on that, please? I think I literally just answered this, so perfect. And what if your orders are supposed to be exact numbers, like or 50? I usually go exactly. I'll go a penny below. I'll go 49 cents. I won't go 50 cents. 99.5% of the time. That's what I'm doing. Next here from Varun. Varun wants an update on Grab. I know you've been stalking this one. This thing has just been so out of play. I feel like no one even knows about it. Was this a SPAC? It was a SPAC, right? Some of these SPACs just, there's no money going into them. I got no technical thoughts for you on Grab, Varun. It needs to get above $7.50. So hopefully you're trying to building out some support here with these tails in this, 6 quarter area. But really, for this thing to wake up, first you got to get above $7.50, and then you got to get above $10. And $10 is going to be big resistance for basically any of these SPACs that have been, spending a significant amount of time below that price, just because when the thing actually gets up there, people are going to use that as an opportunity to liquidate their stock without a loss, right? Next here from Jerry. You mentioned earlier developing a more complex game plan for newer traders. I know spreadsheets help, but is there a guide or rule of thumb, depending on size, that makes sense? Taking profit, buying back stock. I like the question. I wish I had a better answer for you on it. I wish I had a better answer for you on the question. I don't really have a strict rule on it. It just, you'll see kind of naturally as you size up. The more stock you have, just the more you can do with it. You know, like Felipe was talking about earlier today, he was using 2 stop losses. Well, guess what? If you have 100 shares, you can't use stop losses. If you have 200 shares, you could use stop losses, but then you can't really sell to cover risk, right? Because it's almost like you have 2 different trades. You have 400 shares, then you could use 2 stop losses, 200 shares for this one, 200 shares for this one, and still sell 100 and 100 at 2 different prices is like one-to-one kicks to be able to cover risk. But then the more you have, the more you can add to it. Some of what you've seen me do, which might be kind of more where your question is going, where you see like my executions on some of my charts that I throw up once in a while. I mean, you could just see my SoFi executions today that I trade it really rapidly, or Bed Bath & Beyond, or Sumo that I did a lot of trading on. Yeah, you can't do this with 400 shares. It's just not going to work. So I don't really have a number for you on where that kind of gets a little bit more in play, where you could kind of do more of that. It's definitely in the thousands of shares, probably low thousands of shares. You have a couple thousand shares after you got your risk covered, then you can take off 100 shares here and rebuy that 100 shares, or a couple hundred shares and rebuy that 100 shares and try to make the cash flow difference and stuff like that, which is it's a lot of where I make my money. I can use Bed Bath & Beyond as an example. I've been in Bed Bath & Beyond very consistently, not 100% of the time, but very consistently. I've been in Bed Bath & Beyond since like October 2020. First, actually, the short side. I shorted this down move, and then Stefan convinced me that the way of Bed Bath & Beyond was the future, and I started trading it to the long side. And I have, for the most part, been in this in one form or another for the entirety of these moves. I held it through this brutal earnings report that came out. I traded it and held it after hours. We're trying to do that afternoon meeting one day when this thing ripped up to $33 this day after hours. Next day opened at 26 and came all the way back down. But all the volatility in this thing has just made me so much money over time that I can hold at least some of my position from $30 down to 14 and like not even be out of the money on the trade as a whole, because I've been able to make so much of it kind of doing the stuff that I think that you're kind of asking about. So I don't know if that really helps you very, very much. It's just something to think about. The keys to this business, if I could take a half step back and talk less about me, the keys to this business are really in risk management and game planning, right? And part of game planning is risk management, but it's really in this combination of risk management and game planning. The key to the business is how you manage risk. It's how you manage money. It's how you manage the downside. But then, I tell people all the time, as a professional trader with the capital access that T3 provides, I'm doing 85% risk management and 15% reward maximization. But that 15% reward maximization still is really meaningful. What am I doing with the stock that I have to maximize the money that I make from it, to maximize the cash flow I can put in my pocket, to maximize, the reward side of it? Because as much as I heavily emphasize risk management, because I know like 10,000% sure that the reason why people do not succeed in this business is risk management and money management, you still have to be able to make the money when it's there, right? And a new trader, if you're brand new to trading, you probably can't do some of the stuff that I'm doing. The game planning of it is too complicated. I couldn't do it, but it's something that you kind of build into, I guess, over time. And when you're working with more, it also helps because it lets you be able to do, kind of do those things. So, anyway, I hope that's able to help you, Jerry. Yeah, Oxy, awesome for the team today. From Sebastian, hey Derrick, when we have a breakout level that we want to execute, but at the open the stock is still away from that, should we try to buy it in any pattern before expecting it to break, or wait for confirmation, even though it can be extended when the break occurs. Yeah, sure. So both. It very much depends on the situation. If you're gonna cheat on a breakout, which is what you're asking, meaning you're buying. Think about what a breakout is, right? A breakout's when a stock breaks through resistance level. So if you are buying before the breakout, you are buying at resistance or into resistance. Stocks are supposed to go down at resistance. So it's probably not going to be a consistently profitable trade for you in the long run to buy things before their resistance levels. And then we understand from a supply and demand perspective why, the general rule, support and resistance. You want to be short beneath resistance. You want to be long above support. You want to be long above resistance. You want to be short below support. That's the general rules there. And the reason why has to do with supply and demand factors, right? Which I get into in depth in the first class of my training program, so I'm not going to do too much of that here, the specifics of supply and demand factors on why that exists here. But that's your rule set. So think about it. Your rule set is generally, I want to be short in front of resistance. So if you buy every time a stock is going to be approaching resistance, it's probably not going to work for you. But if for some reason, let's say and there's no one who knows anything with certainty in the marketplace, but let's say somehow you knew that the stock was going to be able to break resistance, then sure, buying into the resistance, buying early is going to give you better pricing and better risk reward. So basically what you're describing is cheating on a break of resistance, cheating on a breakout. So you can do it, but you got to be selective, and you really have to have the other things, the other layers of probability that are on your side. Oxy, price of oil, the setup that's kind of come in today that's come into today's trading session that's built out over these last 5 days in it on the daily chart, understanding, like 33 quarter was what I was talking about in the morning meeting. I didn't want to just buy this in the first bar. It's too extended. But after putting this pivot, and now it's back here at 32.90, most likely this ADMA, which hadn't quite caught up yet, it was almost there. It's almost definite, though, that this ADMA is going to be at this low before price gets down to the low. If this thing just goes down now, the next bar would have had to have just been a straight down red bar for you to get stopped out at lows before the ADMA caught up. So by the time I was calling out the cheat here, because that's what it was, I called out a cheat for the team, but buying like 32.90 in this thing versus lows, it was because of those other layers of probability that I'm kind of discussing that gave me the confidence that we could try to get into this ahead of time based on how that daily chart was looking. But overall, it's something you got to be very careful with. So again, I hope that helps. Looking like Mike is next here. Just started to focus on XLE and oil and gas exploration names. I see there was a report on oil Tuesday after the close, another one Wednesday at 10:30. Can you tell us a little bit about the differences in the market impact? I remember last week on Wednesday there was a lot of volatility intraday after the report. Stefan, if he's here, could probably answer that question much better than I can. I'm not aware of any regular oil number that comes out after the close any day that I recall as being particularly important in market moving. But again, he could probably answer that better than me. The 1030 oil inventory number, when it comes out, that has a big effect on the price of oil. So that when we have an idea of oil's inventory, basically the supply that exists, how much of it's gotten used, that's going to move the price of oil, right? Because it's supply and demand, and therefore it's going to move the XLE and all the oil stocks. So that number can be important, but the one that's after the close, I'm not really familiar with. What are the scenarios for tomorrow? Like, what do we want from a strategic perspective, I guess, is Aaron's question here. Yeah, so it's like I yelled to Pat through his radio right before the market closed here and we had this strong day that I feel like the easy money is kind of behind us now. And it's similar to, I feel like I said that exact same thing on this day. Look how similar these 2 days are, right? Downside market extension, a hammer on increased volume. Next day is a little bit lower volume with continuation into equilibrium. Look at today and yesterday. Hammer on heavier volume with the market being extended. Next day, lower volume, we close right in equilibrium. These are the exact same. I doubt that the rest of this is going to be the exact same. I could be wrong, but I doubt that the rest of this is going to be the exact same. It's just trickier here. Like, certainly if we gap up, you should be looking at profit taking. But as far as short selling goes, it's tougher. You know, I think like if you really want to be short selling, you should be looking at like, you want to see the market getting up to like 474, 475. And I don't see us gapping to 475 in the SPYs tomorrow. It's too big. If we open up at 474, 475 in the SPYs, it probably means there's news that we need to assess. But if there wasn't news, you probably want to be selling your long positions into that kind of gap. It's just too big. Same thing on if we gap down, like where are we going to gap down to tomorrow? Gap down to 467 on a big gap down. It's still not even where we opened today. So most likely wherever we open tomorrow, it's going to be a tough open. And we're not going to have the setups. This just reminds me so much of the afternoon meeting now that we did on this day. Because remember this day being a little bit tricky to find the exact bottom, just as yesterday was a little bit tricky to find the exact bottom. And I remember the next day, though, we had so many intraday setups and so many stocks based on their daily charts that gave us follow-through. It's just like that today. These oil names, those hammers, there were so many names that you could have gotten involved in today, and they like literally all worked. And then after that, it's trickier. I was not an advocate of doing a lot of buying on this day, even though the market went up for 3 days after it. I wasn't an advocate of doing a lot of buying here or here or here. At this point, I was getting worried about market extension. It's kind of going to be the same thing tomorrow. Because not only is the market going to open up in a tricky spot, we're not going to have the setups. There's no setup in Oxy tomorrow. There's no setup in Apache tomorrow. There's no setup in ExxonMobil tomorrow. If you want to look at the beaten up stocks, you have a much worse risk reward on any of these names that got back to their ADMA on the daily chart today. The retracement for the most part on these names is done. Look at Roblox. Roblox was one of them today too. For the most part, the retracement on these names, they got back to the ADMA. That retracement money is gone. If you're going long Roblox now, or almost any of those other stocks, you're now no longer banking on a high probability of retracement. You're banking on a lower probability reversal. So the setups are all gone, and like everything. I mean, I'll do my research in the morning, but tomorrow's probably going to be a day where we want to be focused on stuff that reports earnings or stuff that got upgraded or downgraded, and not be focused on the individual stock setups. A lot of them are going to kind of be gone, and it's going to be really interesting to see, though, if some of these names can actually now become reversals. And it's the exact same thing I said at the afternoon meeting on this day, guys. December 21st here. I said here at this point on that afternoon meeting, traders, the work is done. The work is done. The setups were there. The execution is done. Now you just want to have your swing trades on to see what kind of follow through we can get. And that's how it is right now. You guys had the opportunity to be in all of these stocks today. Anybody here could be in Oxy and now be, a couple dollars in the money. It's only a $35 ETF. Be a couple dollars in the money, and now your risk is more than covered. You're making money in the trade pretty much no matter what, unless there's a really adverse news event scandal that happens overnight. Now you just want to see, can I get a day two? Can I get a higher low and a higher high? Right? That's what you want to see. You want to just continue to get paid for the work that you already did. And honestly, if you're flat right now and you have no positions on, tomorrow's a tricky day for you, and you probably don't want to do a lot of trading until things reset up. It's the same thing on, when we missed this 2-day move in Oxy. We missed this 2-day move in Oxy. Am I coming in and am I buying on this day? Or am I buying on this day? Absolutely not. It's the exact same thing tomorrow. Oxy gives follow through tomorrow. Awesome, I'm rooting for it. I know a lot of you guys are still in it. I can't enter tomorrow. The same way Oxy gave this 2-day move and then took 4 additional days to build out a setup is what would need to happen for you now. You need Oxy to now build out a new setup. The building of a setup takes time. 2, 3, 4, 5 days, sometimes more, sometimes less, right? So, you don't force the setups when they're not there, but when the setups are there, we gotta crush them. We got to crush them. Seems like there are so many inside days and up. News and upgrades should be important. Exactly. So we've been seeing a lot of upgrades and downgrades since the new year started, for sure. But I lost my train of thought. But that's going to be what we're going to need to focus on more. You're not going to be able to rely on the market tomorrow. The individual stocks aren't going to have the same setups. So hopefully we have things that got upgraded, downgraded, news that comes out for individual names that puts them in play, that they can be a focus, because we're not going to have as much else to focus on for tomorrow. Because the money was there. From Paul, frustrators with smaller accounts currently. Is there a certain size we should grow it to? It may be personal to each person, but if we are trying to implement more complicated game planning, you were speaking about, also in reference to growing an account versus starting to take out money, how do you manage that? Paul, that's going to be a very individual question. It really depends on the type of scale that you're looking to work to with your trading. I think like a good account size for a newer trader to have or to focus on is like that $25,000 to $30,000, and then as you become a little bit more experienced, it should be probably somewhere between like $100,000 and $250,000 in there, and then getting your T3 prop leverage off that. You got $200,000 in your account, you can access to $4 million. That's kind of real money there, and then maybe that's not enough for you. Maybe you become one of our prop traders that has $1 million in the account with access to $20 million. So it's all just further and further scale on what you're looking for from kind of return and growth. But those, I would say, are some very general sweet spots that you could think about. But it's going to be a very individual question. And then again, the other aspect of your question on is pulling out your profits and taking paychecks. Where do you want to do that? Where does that kind of balance come in? I mean, look, I know my number in my brain that I've had for a while, that I always like to try to keep my account at. But it's a personal number, so I'm not going to say it. And I've actually been thinking recently. I've been thinking recently about trying to grow that number again. Honestly, trying to like 2 to 3x it maybe. And then just become even bigger. So it's something that happens over time. And the reason why I'm thinking about that is just because, honestly, I was thinking about that yesterday into today. Just because there's so much opportunity yesterday into today, and I can't take all of it. I just can't take all of it, because as decently big as I've become and the P&L swings I've had, this, what was this list of stocks that I had today? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's like 25 stocks in this list, in addition to the 10 that I'm already in. I got to be bigger if I want to be able to seize that opportunity more broadly in all these other names. So that's what I'm thinking about as well. So like I said, it's an individual thing. It's going to change over time. I used to, for a long time, I had this number, and it was above that I'd be interested in potentially taking out profits, and now I'm thinking about increasing it again. Next here from Steven. I tried that Trader the News today, free trial, and was able to catch MGI, my best trade of the day. They announced it, and I watched it, saw the red hammer with no volume at 2 p.m. At 2 p.m., 10 minutes later it was going. I jumped in at 771 and sold the way up. Yeah, so, you're trading news there, Steve. Sometimes it's hard. I know Pat's definitely dealt with this. Sometimes it's hard to assess the importance of news. Like, when that MGI news came out and I read it, I don't know what was it? What's the name of the Japanese company? Smile or something like that? I don't know what that is. I don't know if this is relevant. I don't know if that's going to move the stock. Because sometimes, news comes out that's relevant and moves the stock. Sometimes news comes out, you get like a tiny little uptick and immediately comes back down. And it doesn't matter at all. Japanese fintech Smiles. What does that mean? I have no idea if that's important or significant at all to MGI as a company. So I know Pat's dealt with this, and maybe Pat can provide some insight on it because he's the man with the news. I know for sure I've heard him like, oh man, I had that news 8 minutes before the stock started moving, and I just didn't do anything with it, and then the thing went up 25%. It's tough because not only do you have to trade and execute, but you have to kind of analyze the importance of news a little bit. And if you're trying to analyze it before any volume came in, it's tough to do that. So, the way that I like to trade news is when I get the news, usually it's early because I'm getting it from Pat when he posts into the VTF, and Pat always gets into the VTF early. But it's not so early that it's before the news typically. And then usually what I'm doing is my stop loss, if I think the news is significant, which again I had no idea if this MGI news was actually significant or not, then I'm using my stop loss as the low of the news bar. So like for MGI today, I'd be using $7.65 as my stop if I thought that the MGI news was relevant. And you definitely, even by the time Pat typed it up, you could have bought $7.71, which I guess is the same price that you got. And then obviously it gave decent follow through. But even when that came out, I was happy because I'm long the stock. I'm like, is this important? I don't know. I'm looking for the buyout news. All right, team. It's 5 o'clock. Looks like I got through all the questions, so I'm gonna call it. Great day today. Great day for the team today. Awesome stuff. You guys rock. I'll see everybody tomorrow morning. Have a great night.